JPMorgan's global strategist Dan Morris believes that the emerging market performance in 2013 has been disappointing so far, but he's still hopeful of a bounce back.
Did expect and do expect emerging markets to outperform in 2013. They certainly haven't so far this year. Honestly, to us at least, it's been a bit of a surprise. Generally, when you would think in an environment where people are generally positive on risk, positive on equities, you would normally look to emerging market equities to outperform, and they haven't. So that's been a bit of an anomaly. If you ask why, it seems to be that earnings growth in emerging markets has actually disappointed a bit, and at the same time you've had perhaps a bit of a relief rally in Europe and the U.S., given that to some degree things have gone better than expected for the fiscal cliff in the U.S. And generally speaking even in Europe. I think at this point, however, we're still sticking with our call for emerging markets to pick up their relative returns. If you look at what you've gotten, for example, in the U.S. year to date, over 10%, it's going to be difficult for developed markets to keep up that pace of appreciation. So I think there is an opportunity now for emerging markets to start outperforming. I think there is nonetheless a possibility that the market, shall we say, takes a bit of a pause over the summer. Again, with the returns we've had year to date, we think the pace of appreciation from here is going to be lower, maybe a bit of a trading range, a bit more flat than we've seen. But the things that triggered the big sell-offs over the last several years was generally a flare-up in the Eurozone crisis. And frankly, we've been through the Italian elections, we made it through Cyprus, with pretty minor effects on the markets. We don't see a big risk from Europe at this point, or honestly elsewhere right now. So we don't think there's going to be something that's going to trigger a big sell-off like we've seen in the last couple of years.